And it's the last one for the week. Good morning, good evening, wherever the world you're watching from. It's Business Morning live on Channels Television. Great to have you join us. I'm Ladi Williams. Let's kick off your morning with the markets now. We see oil prices slid in early trade, extending losses from the previous session on fears U.S. interest rates could go higher than previously expected, and fresh concerns that COVID outbreaks will dent fuel demand in China. That's what we've been hearing for the past few months now. Futures dropped by 22 cents to $94.45 a barrel after falling 1.5% in the previous session. The contract was on track to fall more than 1% for the week, while U.S. WTI crude futures fell 27 cents to $87.90 a barrel, deepening a 2% loss from the previous session, but on course to end flat. That's for the week. Fears of a recession in the United States, the world's biggest oil consumer, grew on Thursday after Federal Reserve Chairman Jerome Powell said it was very premature to be thinking about pausing interest rate hikes. And to soft commodities now, Robusta coffee futures on ice slid to a 15-month low as the harvest began in top Robusta producer Vietnam, while sugar prices also fell. January Robusta coffee fell about 3.1% to $1,824 a ton after setting a 15-month low of $1,814 per ton. March raw sugar was 0.65% down at $18.35. Dealers said a bearish global economic outlook was weighing on sugar prices, with both the Federal Reserve, Bank of England raising interest rates this week, heightening concerns about the outlook for sugar demand. And back here, the Federal Inland Revenue Service has called on African governments to rethink governance and provide value for taxpayers' money. In a statement, the FIRS says the action would engender public confidence and improve revenue collection on the continent. The service adds that governments should reconsider how projects are reported in the public space, with the intention to communicate how taxpayers' money is used to fund infrastructural projects. All right, we'll take a break now. When we come back, we'll be analyzing trade relations between Nigeria and Canada. That's our next conversation. Do stay with us. This is Business Morning.
This is the 28th edition of the Central Bank of Nigeria's Executive Policy Seminar. And this year, executives of the bank will be deliberating on digitalization of money and the future of Nigeria's monetary policy. The three-day event will include 6 technical sessions and the delivery of 12 papers, ranging from changing the role of the Central Bank of Nigeria in the digital age to financial inclusion and the adoption of the e-Naira. The Deputy Governor, Economic Policy of the Central Bank of Nigeria, expands on the progress made so far since the launch of the e-Naira in October of 2021.
Over 3,320 merchants have successfully registered on the e-Naira. We have recorded over 700,000 transactions amounting to about 8 billion naira on the platform.
Reaching Nigeria's digitally unserved is highlighted as a challenge that must be surmounted as the concept of money shifts from its function to its form. The Central Bank Governor, Mr. Godwin Emefiele, represented by the bank's Deputy Governor of Financial System Stability, admits that more needs to be done to increase Nigeria's financial inclusion rate from just 64%.
Despite significant progress recorded in the use and spread of digital payment infrastructure, particularly in the economic cities, the current financial inclusion rate suggests that more work is required. The high cost of telecommunications infrastructure, including internet and electricity in remote areas, continue to dissuade investment in such areas, whilst low income and financial literacy is already inhibiting social and economic advancement.
The conversations that will be had at this seminar for the next 3 days will be looking at some of the financial situations facing the country, especially when it comes to the digitalization of money. It's a very thin line that has to be crossed very carefully, leveraging on the digitalization of money and ensuring that inclusiveness is actually reached in all parts of the country. For the policymakers who are sitting down here, the advice that they will be giving to the CBN governor will form Nigeria's monetary policy in the next few months. Kayla Megwa, Channels Television News.
And now to our first conversation. Nigeria is Canada's largest trading partner in Africa with $2.67 billion in bilateral merchandise trade, according to the Canadian Trade Commission. Canadian merchandise imports from Nigeria amounted to about $2.1 billion, with Canada's exports to Nigeria totaling $605.4 million. For more now, let's talk to CEO of Africa Canada Trade and Investment Ventures, Mr. Kenneth Oguzie, joining us right here in the studio. Great to have you join us.
A very good morning to you, and a good morning to the viewers as well.
Yeah, so quite an interesting relationship there we have with Canada. I know we import most of our wheat, from there, but from your perspective, is the trade between Nigeria and Canada balanced?
I wouldn't say it's balanced because, of course, for a variety of reasons. But I think for me, one of the main focuses around the volume of trade. If you look at like Nigeria being pretty much like the largest economy in Africa, and of course, a global player doing 2.7 billion. Put that into context, looking at China doing 15 billion with Canada, and India doing about China doing 35, India doing about 15, then obviously that tells you there's a huge gap there in terms of volume, which shouldn't be there. So I think the deficit is there, but the volume as well is something that we really need to look into. So I think the discussions really would focus on how can we ensure that we grow those volumes in terms of making it become more commensurate in terms of the size of, the economy which we have in Nigeria. So a country like Canada should be doing more trade with Nigeria, obviously, Of course, we are the largest trading partner, with Canada and comprising to other African countries. But a 200 million people economy, largest black nation in the world, you would probably expect more.
So we need to see more.
Absolutely.
More
and that's why we always, bring up these conversations, and we always want to have these discussions.
All right, let's look at the opportunities there. What opportunities, are there, talk from a value chain, perspective, looking at that bilateral relationship?
I think there are a lot of things we can look into. So first of all, we have a growing ICT sector in Nigeria. So you talk about like fintech, you see the number of startups coming out of Nigeria, raising money on, global markets and stuff. I think Canada it's an opportunity for Canada to really work to partner with these startups. There's a lot of opportunities. There's a lot of young people. If you look at the demographics in Canada, aging population, Nigeria, younger people. So why can't we sort of create avenues or platforms for engagement between startups in Canada as well as those here? Then renewable energy is another big thing too. Renewable energy in Canada, as we move towards this whole environmental, eco-friendly product, energy sources, Canada is probably, ahead, compared to a lot of countries like Nigeria. But I think that opens up opportunity for partnerships. It's not so much about, trade from Canada to Nigeria. I believe in partnerships, synergy. There are a lot of energy companies in Nigeria that can partner with energy companies in Canada, explore new ways of doing things, tailor it to our local reality, and then it's a win-win for both parties. So that's another area. But I mean, right now, if you look into some of the exports coming out of Nigeria to Canada, so you have things like, mineral oils, all these type of things, regular oil as well, cocoa, shea butter. There's still a lot to be done, in terms of how the government can promote or support small businesses, medium-sized enterprise to export more to Canada, because I think we do have a lot of strengths, but there's some challenges around this whole piece about manufacturing, production, which we need to sort out to really help us leverage that market and do better in terms of the numbers coming from this way to that way. So those are some of the, more common ones we can talk about, really.
And looking at, other issues, plaguing these parts of the world, the currency. Currencies is a big issue. How is that affecting, this trade?
Well, it is affected a lot because, as a business, you want to ensure that whatever you invest in or doing business with on the other side of the world, there are certain level of stability. So I call it making Nigeria a bit more investment attractive, economically attractive. So the fiscal policies need to be sorted out. We know how the whole currency is, doing up and down. So we just finished like a trade mission from Canada, brought them over to Nigeria recently. And I think one of the main discussions or concerns they had was around the fluctuating currency. So how do we help with some of these things? Things like ensuring that there's more exports. We boost the manufacturing industry so that it can help us in terms of generating the currency we need and really positioning our companies. So other pieces around investment attraction. We need to have a more solid investment attraction policy. I know things like the Nigerian ambassador and his team in Canada, they're doing a lot of good job in terms of promoting Nigeria. But I think there needs to be room for more stakeholders to get involved and really help and tailor, personalize the message. You cannot use the same investment strategy or investment message, you're selling to the US or Germany for Canada, because it's a more conservative group. So you need to ensure that you understand the terrain, put out the message, and then that helps for people to really come on board and see what are the possibilities. So there's
more like
still some
tailored reach.
Absolutely, absolutely. Tailored reach. That's always my message. Tailor it, because every environment is different. Every sector is different. So tailor it to Canada and make Nigeria more investment attractive, business attractive country, and then we can see more inflows, or we can see more partnerships.
Because we actually do need a lot of inflow.
We do
right now. Let's look
at
these sectors, generally in Nigeria. Which ones are more will benefit more, from this relationship?
Well, so I spoke about the renewable energy sector because that's one that I'm very passionate about personally, because I think environment is a big thing. You see how pollution and all of these pieces.
That's top on the agenda.
Oh, top on the agenda, from the UN and all the various multilateral organizations. It's always something priority. Some people might call it first world problems. They would say, oh, it doesn't matter. It's not something that affects us here. But look at things like the flooding and all of this. These are all tied to the environment. Look at things like mortality rates, life expectancy in Nigeria, 45 years. And we don't understand how things like the environment affects those things. Nigeria is vibrant. Nigeria has tons of opportunities. So if we can work together with some of the players in like those energy spaces, it can help us. Now look at the power sector too. Power sector is a big thing. Canada is looking to different forms of alternative sources of power. Nigeria is on that path right now, but I think there's a lot of work to be done. Let's utilize the technology out there, tailor it to us. It creates more opportunities for local companies. And then over time, we can actually teach Canada as well in terms of how to do things. Because I think we're very vibrant people. We are thinkers. But I think sometimes when you don't have the enabling environment, then you sort of hinder that mindset. So those are some of the things. But one thing I also need to mention is the brain drain piece around the education, which you and I understand, because we have all this, we're sending all these international students out there in Canada. Nigeria is probably one of the top 5 countries sending students to Canada. But I talk about we need to grow more partnerships. We need to create environments or situations where universities in Nigeria can partner universities in Canada, exchange programs, knowledge exchange, transfer. Both parties can leverage on it rather than just the one-way relationship which we have right now. So those are some of the core that I think the opportunities lie.
Quite interesting. But now let's look at the imports, from Nigeria, talking about Canada now. It's included mineral fuels and oils, cocoa, rubber, lead, basically unrefined, products. But what kind of conversations are being had, to get us to get more refined, products out there?
Absolutely. So you know how this works in terms of value chain. I strongly oppose having to always send raw materials, outside Nigeria. I think we should start looking to how do we add value before we send those things out, because otherwise you're missing out in terms of the benefits of import, or you're actually just limiting yourself. So I think if we have a more solid manufacturing sector in Nigeria where we can process these things, we have the manpower, we have the environment, we have everything. But I think it's just stakeholders really sitting down, looking at the big picture, engaging the right set of professionals, engaging the right set of organizations. Then we can say, okay, cocoa, instead of sending raw cocoa to, all these countries where you then go process it, and then if some of it finds itself back into our shelves in Nigeria, how about we add more value in terms of this? If we have timber we want to export, finish up the timber, do more work, and send it over. So I think that's one of the key pieces that we need to work on, rather than just moving raw materials that way, because it doesn't...
Because that narrative has to change.
It has to change. It's not sustainable, really.
Such a long time. But tell us more about the bilateral agreements, between Canada and Nigeria.
Well, so the major one is the FIPA one, which is the Foreign Investment Protection Agreement, which is yet to be ratified for reasons which I don't know, because I think investors one of their biggest problems in terms of investing in many countries are about structure. Like, they want to be sure their investment is protected. And these investments, no one has time to be going through litigation all the time, especially when you can see that the potentials are there. So I think I'm calling on stakeholders who are involved in terms of this ratification to ensure that we ratify like that agreement, the FIPA agreement. And then, of course, the new AFTA agreement as well, the Free Continental Trade. the message we've been putting as an organization out there is to say, listen, Canadian companies, Nigeria will be the gateway into the African market. You know, it's a large economy, so you come in here, then you could play in the African market and think about what are some of the ways you can then partner with this organization. So the AFTA agreement, for sure, it's a game changer. It's very exciting for us in the trade and business industry, because I think Africa now has pretty much the largest free trade zone globally, in terms of if you look at the 1.2 billion people market and the landscape which it covers. So stakeholders, we need to sort out the FIPA agreements, the foreign protection, and then, of course, really leverage on the new AFTA agreement as well.
And we see, you know, Ghana and Kenya already, you know, profiting from that agreement.
Absolutely.
They had their tea deal.
Absolutely.
Earlier this month. We try to see other African countries actually,
absolutely,
you know, play. But thank you so much. That was Kenneth Oguzie, CEO, Africa-Canada Trade and Investment Ventures. We'll keep tracking that trade relationship.
Thank you very much, and
Thank you.
Great to be on the show.
Thank you so much.
Thank you.
All right, now, so we'll take a break. When we come back, well, as central bankers globally raising rates, where do investors hide? That's our next conversation. Do stay with us. This is Business Morning. Welcome back. Now to our next conversation. We see the U.S. Federal Reserve has raised interest rates 6 times this year, raising concerns that the hikes will intensify the global economic downturn and debt pressure on developing economies. Yesterday, the Bank of England also raised rates by 75 basis points. And back here in Nigeria, the MPC has raised rates about twice now. Another fight to rein in, you know, sky-high inflation at this point. But how do investors navigate the recession? Let's talk to Mr. Tajuddin Ibrahim, Director of Research and Strategy at Chapel Hill Denham. Great to have you on the show. It's been a while.
Thank you very much for having me. It's been a while indeed.
Yeah, so looks like the constant rate hikes are moving on, you know, regardless of the risk of recession. You know, can the inflation battle be won this way?
Well, I think the inflation battle can be won this way via interest rate increases across major central banks, but there's a caveat to that, and it is around the questions is around what is driving inflation in those environments. If you know, increase in spending is what is driving you know, inflation in those environments, talking about, you know, rising demand, then, you know, it will address you know, the concerns around inflation. So when you raise interest rates in an environment where inflation is being driven by higher demand, then you as a central banker will be able to you know, tame inflation in such an environment. But for frontier and emerging market economies, I really doubt if you know, raising interest rates, you know, is going to help you know, curb inflation. Nevertheless, we should bear in mind that the central banks across the world, you know, have little or no ammunition around them to fight inflation other than raising interest rates. The only thing that, you know, one can think about is for them to be less aggressive so that we are not talking about economic recession. But indeed, the risk of a global economic recession is very high in an environment of aggressive increase in interest rates, which is what we are seeing currently across major central banks in the world.
And we see that the central bankers are hinting at more, you know, aggressive rates, you know, if inflation, you know, doesn't show any signs of abating. But we've seen risk assets, you know, they've plunged this year from previous highs, from, you know, equities to cryptos, all of them, they've all seen, you know, lows. And I'm wondering, do you think there's still more pain ahead?
Well, I think there is still more pain ahead, just for us to be honest. And because the reason is that, you know, the aggressive stance by major central banks, such as the US Fed, the Bank of England, and other major central banks across the world, their stance around raising interest rates has not really slowed down. So which means that, you know, we probably are going to see, you know, further rate hikes over the next, you know, couple of months. And that indicates that, you know, risk assets, you know, holders or investors should be worried and, should look to do something to their portfolios in terms of, rotating out of such risky assets, or in terms of portfolio rebalancing. They should not be static. They should do something to arrest any form of diminution in the asset value that they are carrying in their portfolio. So I think, it really calls for concern for risk asset in this case.
But what about, investors that have held, through the downturn? Do you think it's too late to, start, taking positions out, at this time, or do you just, stay the course?
Well, I think it depends on their investment, sort of horizon in terms of time. If you are a long-term investor, you want to stay in, investment securities where you have high conviction over the long term. If you are a pension manager, for instance, you are a long-term investor. If you are a life insurance business, you are a long-term investor. If we are talking about, such investors in the market, we would expect them to be long-term in nature. And it makes sense for them to stay in such assets up until when we begin to see a re-rating of those securities. But for short-term investors, it is a completely different story. And my sense tells me that such investors should look to exit such investment so that they are able to minimize their losses. They should also look to go to other, asset classes if that will help. Traders are also in the same shoes in this regard. They are short-term in nature, and I really advise that they leave such risk assets for better investment securities, in my view.
And I remember when the pandemic started, we saw the pandemic darlings, talking about those stocks that actually used that opportunity, and gave a lot of gains when COVID-19 was ravaging. But now, do we have, because now we're seeing the Bank of England warning of, England going to the deepest recession. It's a global recession forecast, we're getting at this time. Are there recession darlings?
Yes, there are, because you will find some sectors being broadly defensive in a recession period, and because you will continue to see demand for their goods and services. Number one of them, to my mind, are food businesses. Food businesses are what investors can look at in period of recession. Number two of them are drink businesses. When you eat, you have to drink some water or you take some soft drink. Such sector is also a good one and can be defensive in an environment of economic recession. The third to my mind are baby food producers, for instance. You will find that people still have to feed their babies. Such segments of the food sector will also be defensive. So there are a couple of other sectors, such as the sugar producers. Sugar producers produce not just for direct consumption; they also produce for other large uses in the industrial sector. So you would expect that kind of business to also be defensive. So I think these are sectors, that investors can consider. Telecom, if there is recession, we will still have to communicate. If we do not communicate via voice calls, we would communicate via data. Data was a major driver of telecom performance during COVID-19. So these kind of sectors are, broadly speaking, defensive during recession, and investors, to my mind, should pay attention to them if we have a recession.
And we've seen, commodities, they've had a fire year, this year due to geopolitics. Is it still, can one still, trade these commodities now? Can one still take positions, at this time, or do you think the peak is actually near for commodities?
Well, I think For commodities, we have had a good year, just like you said, but the reality also to bear in mind is that, we have some downside risks, and, such downside risks are what investors, I believe, should pay attention to. Number one of them is, concerns around economic recession globally. So with that kind of, fear by, the entire world, you wouldn't see, commodities having a promising outlook. We have seen much of them in terms of appreciation, but the outlook in this case, to my mind, is less promising. The second and fundamental concern in this case, in terms of the outlook for commodity, is what we are seeing in China in terms of COVID-19. For instance, yesterday, Thursday, they recorded, 3,800 new cases as carried in the news. So which means, they are putting more stringent, policies in place in terms of lockdown. And that suggests to me that, fuel demand, for instance, may slow. And then, that means a less rosy outlook for commodities, talking about hard commodities in this case. So it is not a bad time, but, there are downside risk in terms of, the outlook for the commodities.
And we've seen year-to-date returns, for the NGX is moderated to about 3%, at this time. Well, what are you telling, investors in that market right now?
Well, I think for long-term investors, it is not a new thing, and it is something that they have witnessed over the, over the past, 5 to 10 years. If they stay in there, a re-rating will materialize, at some point. The second thing to my mind is that, stock market generally is a market where you have to just be ready to take some losses. And when you take some losses in a particular sector, you rotate to other sector, of the economy and as listed on the exchange. I think despite all the, downsides that we have seen so far, there are still some super stocks that have delivered excellent return on a year-to-date basis. You find them in the defensive sectors, such as the oil and gas, such as the telecom sector, such as, agriculture sector. If you are in all these sectors, you should stay in there and even make more gains before we close the year.
All right, but before I let you go, what asset classes are you recommending to your clients at this time?
Well, the asset class that we strongly believe, will be a winner this year, and that asset class has been a winner, since the beginning of the year. They are, dollar-denominated asset class, or any security that is linked to dollar return. For instance, Seplat is a stock, but when you are buying Seplat, you are not buying just Seplat. You are also buying some potential gains in terms of foreign currency. Airtel Africa is a stock. When you buy into Airtel Africa as a stock, you're not just buying a stock that will appreciate because of strong outlook, but you're buying a stock that has a good element of foreign exchange gain in it because they pay dividend in US dollars, and as the Naira weakens over time, you would have, more Naira to yourself because they'll be paying you in either US dollars or they will pay you the equivalent in Naira, based on whatever the exchange rate is at that point in time. So we like those, kind of asset class. We also like, any business that is diversifying. This is where we like the likes of Access Bank, that is diversifying this business into, asset management and also pension management. Those are our views on how investors should look to play the market in the medium to long term.
Right, so much for investors to chew there. Thank you so much, Mr. Tajuddin Ibrahim, Director of Research and Strategy at Chapel Hill Dan. It was great having you on the program. All right, now, so yeah, there you have it. I know investors, so many choices to make at this time, but at the end of the day, you want to make profit. All right, let's bring in Anita now to tell us what's happening in the fixed income market. Anita, great to have you.
Good morning, Ladi.
Morning.
Yeah. Well, fixed income markets, it's a mixed sentiments for the markets at the bond segment and then the treasury bills space, as well as the OMO and the central bank special bills. So I'll be talking to a fixed income dealer at FSDH to give us, what's a feel of how it's going on.
Right, for those who like safety.
Exactly, exactly. Don't forget that if you do not invest in one of the markets, you have other options. You have a potpourri of options for the market.
Right.
All right, so now with that being said, this is how the bonds market space at results from the FMDQ OTC exchange. This is how it turned out for the bonds market. Bearish sentiment is what it turned out at the close of Thursday's trading session. Average yield there expanded by 4 basis points to 14.4%. But taking a look at the board there, the number of deals that we had, sorry, if we can go back to that, the bond space, total number of deals there was 16, total value there 9.5, about nearly 10 billion naira. Now, the highest concentration was on the 18th of April 2037 paper. Now, flipping over to the treasury bills market, it was on the reverse side. It was, it was bullish, and then the average yield there contracted by 20 basis points to 10.9%. But on the board there, the discount is 12.87 for the 9th of March 2023 paper. Total number of deals on that side was 6, but the highest was on the 28th of September 2023 paper, which the discount is 13.43%, and the total number of deals carried out there was 9, and cumulative is 24. Now, moving over to the OMO segment, the average yield there wasn't changed at 10.2%, but looking at the board there, what we have, the 13th of December 2022 paper, the discount there, 14.38%, total number of deals carried out at 9, while cumulative, total number of deals there is 18. And for the central bank special bills, the only paper traded as at Thursday was the 28th of November, which is later, a couple of weeks from now, 28th of November 2022 paper. It had only 1 deal at a value of 81 billion naira, which is what you see total there. So if we have our analyst to talk to us there, Caleb Alimi, a fixed income dealer at FSDH, to tell us more about what is going on at that market as we speak. But if we do not have him, I think we can go over to the equities market space. Okay, now let's talk to Caleb Alimi, a fixed income dealer at FSDH Merchant Bank. Good morning, Caleb.
Good morning, Aditi. Thank you for having me.
Okay, so now I'm sure you've seen how the board there was for the activities at the fixed income space. Now, can you tell us, give us more insight into that and what to expect in Friday's trading session?
Thank you very much. From what we saw on the board, we could see that mostly a lot of the activities were on the short-dated papers, starting from the treasury bill space. You could see a lot of concentration in the 28th November, in the December papers, and the January-February papers. That's largely because of expectations of higher interest rates across the curve. And so what you're seeing is that due to the temporarily liquidity boost that we have, market figures yesterday were over 560 billion, and that's largely as a result of some FAC allocations that came in earlier in the week and all of that. So, and no major funding obligation in the market. So because of all of that, you're seeing concentration for short-dated treasury bills. You found, from your records as well, that it was the reverse on the bonds. So the treasury bills is largely driven by the availability of liquidity, and we're finding that concentration of those are largely on the short-dated papers. You also saw that rates were depressed in the treasury bill space, largely because, of CRR avoidance strategies a lot of banks often deploy whenever there is a moment of respite in terms of liquidity. And that's why you've seen treasury bills decline where it has. On the bond side, largely in the secondary market, we've also seen some bit of demand, not a lot of it. And because, come to think of it, we did see at the previous auction, the 2037 paper closed at 16% on the yield. And then now market has dragged it down to about 15.9 because it's actually a new high for the year. And so there's still a lot of interest in that sort of paper. But we do see that we'll continue to see more concentration for short-dated bills, given the expectation that as the year continues to wind down and going into next year, we expect higher yields. And so that's expected to continue. Given today's trading day, till Friday, typically we don't have a lot of activity. But again, depending on the CBN's CRR intervention or CRR activities to determine what banks will do at the short end of the curve.
Okay, for the money markets week, because I failed to mention the money market, how is the money market performing at the moment, the overnight rates?
Overnight rates actually crashed yesterday to 8.5%. They've been trading for about 2 weeks at 16.5%. Like I said, given the inflow of the SRA allocations and a bit of some DCR that some aspect of the market have received, we've seen overnight figures come down to single digits, 8.5%. We expect that will close out the week that way. But like I said again, depending on the activities of the CBN concerning CRR, that will then determine where market figures are again, and then market will react.
Okay, so one last question before I let you go, just under a few seconds. In a couple of days from now, the National Bureau of Statistics will be releasing the October inflation report. So what's your expectation for investors if the rates go higher?
I mean, I was going to say, like we'll experience in the markets, everything has gone up. So we expect that the data will continue to reflect that, higher inflation figures. That would also continue to impact on investors demanding higher rates, just to narrow that gap of a negative return. So given we expect a higher inflation figure, and so we expect that investors will continue to demand higher interest rates.
Okay, thank you for that analysis. And then we'll keep our eyes out in Friday's trading session at the fixed income market. I was Caleb Alimi, fixed income dealer at FSDH Merchant Bank. Now we go over to the equities market. This is how it turned out yesterday. Well, for the equities market, 25.23 billion was knocked off, and then the market reversed back into the negative territory, but still withholding the 44,000 points of the all-share index, while the equities cap barely survived, falling from the 24 trillion level, and that's no thanks to losses from quite a number, 19 equities, and the leading that decline was Geregu, which it fell by 3.57%. In percentage term, Unilever was the highest decliner there. 8.29% is what it printed. Now, if you take a look at the sectoral performance, this is how it turned out. Quite a mixed picture there, but the Reds have it there. Consumer goods was down by 0.18%. Banking was up just by 0.05%, while the oil and gas sector, which was impacted by profit taking on the shares of Owando, it fell by nearly 1%. Insurance was down by more than 1%. Over to the volume of activities. Volume of activities, it was on the upside by stronger margin in contrast to what we had in the previous session. But the deals was down. Deals was down by 10.72% in contrast to what you had. Access Core was the major contributor to this volume, as well as the value. It contributed 52.21% to this volume, and then 46.83% in value. So that's it for that market. For the unlisted securities market, it was unchanged at the close of Thursday's trading session. But for the activity chart, the volume of transactions there carried out was down by 94.29%. And that's it for that unlisted securities market, Ladi.
Yep. Well, I guess investors just want to beat inflation at this point.
Exactly.
And find a way to navigate if it comes, a recession.
Exactly.
All right.
Well, investors would always would look for a way to minimize losses. Right. It's all about making gains, but you must also share in the losses at some point.
Talk about making gains in a recession.
Exactly.
Thank you so much, Anita.
Pleasure.
All right, we'll take a break now. When we come back, we head to London. Do stay with us. This is Business Morning. Welcome back. Let's head on to the UK now. Juliana, good morning. So it's the morning after the BOE hike, and we did get that warning by the Bank of England that the longest recession in 100 years is coming. Quite scary.
Yeah, good morning, Aladi. A pretty gloomy outlook from the Bank of England and its governor, Andrew Bailey, yesterday, she said, predicting that the UK is already in a recession and it will be the deepest, darkest recession since the Great Depression in this country in the 1930s. So that wasn't great, and we did see it impacted in the markets. This morning, the UK Blue Chip Index is actually trading in positive territory, but we did see yesterday that the pound was trading at its lowest level against the US dollar in about 13 days. rupees, so a British pound, right now will probably get you about $1.11. And it's all about these interest rates. Again, economists had already priced in that the Bank of England would be much more aggressive with its stance, and we did see that. We saw interest rates rise by 0.75% to 3%, which is the highest it's been since the 2008 financial crisis. But of course, this does have a knock-on effect. We know why the Bank of England is doing this, because it wants to bring down that double-digit inflation to what its benchmark is, which is 2%. We're not going to see that for at least a couple of years. But because borrowing does cost more, it does affect people. It impacts people who are on mortgages, particularly those who are on tracker mortgages, as well as those who have credit cards and loans, basically the whole of the United Kingdom. So things are not that great. We are hoping that things will get better. So now all eyes are on the 17th of November, when Jeremy Hunt, the Chancellor, will unveil his autumn budget.
Jeremy Hunt is considering, rising capital gains tax to fix the £50 billion black hole. Looks like another difficult decision there.
It is going to be a difficult decision, but for the vast majority of the people in the UK that don't get to benefit from capital gains tax, this is exactly where he should be hitting it. But I think it's fair to say that Rishi Sunak, the Prime Minister, has said everybody in the UK who is a taxpayer is going to have to pay in some shape or form. And we know that the current Chancellor has been speaking to his predecessor, George Osborne, who, of course, was the Chancellor under David Cameron. Some say he did particularly well, and he has been advising him. And what we hear has come out of that discussion is raiding the capital gains profits. So capital gains are basically profits that pretty wealthy individuals make if they sell a second home, if they sell a business, or they sell shares. So that will probably rise. And then there's also been talks of scrapping a dividend tax allowance. So at the moment, any dividends you have, you don't have to pay tax if it's less than £2,000. That could be scrapped, and you will be paying some sort of tax on your dividend. But we're not knowing for sure. We know that this Conservative government, or the Conservative Party as a whole, do like to leak information to the media. So that's what's been, flouted and touted this morning. But again, we'll just have to wait and see. It's in 2 months. It's in 2 weeks' time, this statement, which is due to be delivered. And we know from what's been happening in the past couple of weeks, 24 hours is a long time in British politics. So let's just see what kind of data we get until that point to see if there are any amendments as necessary.
All right, Juliana, I guess we'll still be waiting for all those other data coming out of the UK. Thank you so much, Juliana.
Thank you.
Juliana, they're giving us the details from the UK. Let's head on to other markets still impacted by the recent rate hikes. Let's look at what's happening with Bitcoin. Now, we see the sentiment in the market, 30 points there. Fear, still fear, just what we had yesterday. This holding on as some kind of support, talking about sentiment in the crypto space there. Let's flip over to see what the market cap is saying there. 1.02 trillion, holding on to that $1 trillion mark, still up 1.34%, but we see lower volume this morning, down about 20.82%. Bitcoin dominance sitting at 38.57%, lower than the 40% level at this point. Let's look at the price of Bitcoin there. 20,638 did get that nice bounce after hitting 20,060 something dollars. Immediately, the FOMC there announced their rate hike, and we got that drop in most markets. Bitcoin wasn't left out, was returned gains there now, up 1.47%. Volume traded in Bitcoin, $44.52 billion. We know this market is still sensitive to the rate hikes by the global central bankers there. Let's look at the price of Ethereum there, $1,582. That's up 2.21%. Also getting that bullish trend back up there. It held the 1.5 level all through the volatility there. 24-hour volume trade at $13.38 billion. Let's look at the top also market cap. It's all green. It's all green there with BNB there. The Binance token, the biggest mover this morning, is up 5.67%, $345.34. It did start that run from about $280, and it's still moving on that now. Cardano there up 3.20%. You know what? Let's talk to Gilbert Jokpata first. Now let's see what he's seeing in the market. Hello, Gilbert.
Yes, good morning.
Good morning, Gilbert. It's looking like a good Friday for the crypto market, but it remains to be seen if this continues to the end of trading today. But I got that information that 12 independent entities pledge legal support for Ripple. That's XRP. This one here. They planned to support XRP. You know, we had that legal tussle with the US SEC. How's it looking?
Okay, you know, it's been a legal battle since the December of 2020, which even affected its investors from seeing the kind of price performance we know Ripple always put up in a bull run. But the table seems to really be turning sentiments, and tables seems to really be turning in favor of Ripple recently, with support from both
Hello, Gilbert. Hello, Gilbert. All right.
Yes, I'm with you.
All right. I don't know if there was a distortion there. You were saying something?
Okay, I was saying the kind of support Ripple is getting from both the traditional industry, the traditional finance industry, and the cryptocurrency industry is quite remarkable. Tables and sentiments are beginning to turn in favor of Ripple. And Ripple CEO have also said he's going to take seek compensation once verdict is out, which we are expecting final verdict by the first quarter of next year if it turns out that Ripple isn't a security. And right now, I think the kind of support they are having is remarkable. I must actually comment on that, especially when you see the kind of big corporations gently coming in support or in favor of Ripple, which also include Coinbase. Coinbase also makes up that number. We also have the chambers of digital commerce and a host of others. So when you have this kind of support going to court, it's an interesting one we have to watch out for.
All right, been trying to see how this, tussle actually ends between XRP and the U.S. Securities and Exchange Commission. We'll be watching that to see how it also impacts, the price of XRP. Thank you so much, Gilbert Jokpata, financial market analyst.
Yeah, you're welcome, Ms. Ladi.
All right, let's head back to the markets now. Let's look at the coin watch. Let's see the coin watch. It's yeah, that's it there. It's a micro cap there. MetaNet, 12 cents. It did have a big pullback recently. They have plans about having those concerts on the metaverse. That'll be quite interesting. Don't know how that's going to play out, but it'll be interesting to look at. This token is not doing so bad. We've had that big pullback after hitting an all-time high, about 30 cents. Well, now it's trading at 12 cents. So I got my eyes on this one of those micro caps there. Let's look at the top 5 gainers now. We see OKB there. Topping that counter there is up 24.19% at $20. OKB started a run. It's one of the centralized exchange tokens. And we see Matic also getting a bullish run. Phantom, 26 cents. This was quiet for a while, trading around 20 cents, but starting to move now, up 16.17%. Let's look at the top 5 losers. We see Arweave topping that counter there is down 13.29%. And we see Clay at the bottom there, down 5% at 23 cents. So that's how the crypto market is looking today. Not so bad. Hopefully we see it actually closes green at the end of trading today. All right. That's all for the markets, and that's it on the program today. Thank you for watching. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. And you can watch this again on our YouTube channel. Just search for Channels Television on YouTube. Flip over to our videos. You can see all our production. Thank you for watching. I'm Ladi Williams. Bye.